The Schwab U.S. Dividend Equity ETF is making waves, not for soaring highs, but for a historic price drop to $25 that's got the market buzzing. While panic grips the masses, savvy investors see a golden window, a 4.16% dividend yield, a 22% dividend hike in Q1 2025, and a 13.13% annual return since 2011. Despite tariff jitters and energy sector woes, SCHD's rebalanced portfolio, packed with resilient healthcare, consumer staples, and energy giants, stands ready to rebound. With analysts eyeing a $30–$35 price target, this isn't just a dip. It's a rare chance to lock in high-yield income and long-term growth at a discount. Dive into why is the smart money's bet for 2025 and beyond. Today's episode, Opportunity, please support our sponsor. They provide valuable information for you and me. If you enjoy this newsletter, please consider sharing it with your friends and business contacts by clicking the button below. Share the newsletter, don't miss out on future gains. Unlock the secrets to effortless investing with our smart portfolios. For a limited time, grab our fast track to build a winning portfolio blueprint at a 50% discount. Here's what's waiting for you. Step-by-step guide. Start investing in minutes with our chosen online broker expert. Insights. Uncover the strategies behind our recommended smart portfolios. Easy diversification. Gain exposure to a wide range of assets with just a few clicks. Long-term growth potential. Build a portfolio for consistent returns over time. Start building your winning portfolio today. Get the blueprint to build a winning portfolio today. Today, you can get the list of stocks from Cybertech Portfolio for free. Free Cybertech Stocks Portfolio. Paying the bills. Our newsletter is powered by Beehive, which partners with trustworthy and high-quality advertisers. When you click, not only do you have the opportunity to benefit from the ads, but you also help support our efforts to improve our newsletter for you as our readers or listeners. Please support our partners. Refined Brain Food is delivered daily. Every day we analyze thousands of articles and send you only the best, tailored to your interests. Loved by 510,62 curious minds. Subscribe. The Silent Opportunity, why smart investors are doubling down on SCHD. Amid crisis, in a world where market swings are a constant, there's one trend that's catching the attention of savvy investors. SCHD, a renowned dividend ETF, is experiencing its most significant drop in history. The $25 price tag on this ETF has caused shockwaves, leaving many wondering whether this marks the beginning of a downturn or a rare opportunity. While the masses are pulling back, some are recognizing the immense value beneath the surface. This isn't just a temporary dip. This is a moment of opportunity that smart investors should seize before it slips away. Crisis or golden opportunity? If there's one thing that seasoned investors understand, it's the value of staying calm when the market reacts with panic. This is precisely what is happening with SCHD. The ETF has faced a sharp decline, a drop deeper than anyone anticipated, but it's crucial to understand the larger picture. SCHD, despite the short-term turbulence, is still a powerhouse. It has proven its resilience and reliability over the years, delivering an annual return of 13.13% since 2011. The past month's dip is just one chapter in a long and fruitful history. For many who depend on their investments for income, particularly retirees or those looking to maintain cash flow without selling off assets, SCHD is indispensable. The beauty of this dividend ETF lies in its ability to pay out consistent dividends even during challenging times. The first quarter of 2025 saw a 22% increase in dividends compared to the previous year, further cementing the strength of SCHD in a volatile environment. With a current yield of 4.16%, it's not just a small consolation. It's a tangible, life-changing opportunity for income generation. Why are smart investors still buying? The downturn in SCHD's price is largely attributed to macroeconomic factors, including shifting market conditions, the effects of tariffs, and fluctuating oil prices. Energy stocks, a substantial part of SCHD's recent rebalancing, have taken a hit due to falling oil prices and rising geopolitical tensions. While this seems concerning at first glance for those who understand the cyclical nature of the markets, it's nothing to fear. Energy stocks have always recovered, and the same will happen here. Moreover, SCHD's rebalancing strategy has increased its focus on sectors like energy, healthcare, and consumer staples, industries that are typically well-positioned for recovery after market disruptions. When everything falls, this kind of portfolio restructuring makes SCHD an attractive buy. The underlying companies in the ETF are not fundamentally flawed. Rather, they are temporarily undervalued. This temporary decline presents an excellent opportunity for long-term investors. Rather than seeing a crash, consider it a market correction, a chance to buy into a high-quality ETF at a discounted price. Analysts have pegged SCHD's fair value at around $30 per share, a 20% upside from its current price, and some projections go as high as $35. These price targets reflect the intrinsic value of the underlying assets and offer a clear signal that now is the time to get in. The power of dividends. Why you shouldn't ignore the income. For many, the beauty of investing in SCHD isn't simply in the price appreciation. It's the reliable income stream it provides. Dividend investing isn't a strategy that's built on instant results. Instead, it's about creating a sustainable income source that allows investors to live off their portfolio without having to touch the principal. This is particularly important for those who require consistent cash flow for retirement or other expenses. A fundamental mistake that many investors make is focusing too much on capital gains while neglecting the income aspect of their investments. With SCHD's current dividend yield of 4.16%, investors are receiving regular income despite the market's volatility. In a year like this, where the overall market has experienced significant declines, that income stream offers a degree of stability that many stocks or growth funds simply cannot match. For instance, imagine investing $10,000 in SCHD and contributing $1,000 monthly to that position. Assuming the dividend yield remains at 4% and dividends grow conservatively at 8% per year, the portfolio could reach nearly $900,000 over 20 years. This includes $225,000 in dividend income, with the potential for $36,000 per year in passive income by year 20. For an investor looking for long-term wealth building, these numbers are a testament to the power of dividends and compounding. Rebalancing strategy. Why the timing is perfect now might be the perfect time for rebalancing your portfolio. With the current market drop, assets like technology stocks, which have been hit particularly hard, are likely causing some anxiety. Many investors are looking for stability and are considering a shift toward value-based investments like SCHD. The beauty of this moment is that, while tech stocks have suffered, SCHD has become significantly more affordable. By selling off some of those underperforming tech stocks and reallocating those funds into SCHD, investors can take advantage of the discounted price while minimizing the tax impact on capital gains. Additionally, for those already in or nearing retirement, SCHD offers the perfect blend of stability and income. The ETF's robust dividend growth and consistent payouts provide peace of mind for investors who rely on their portfolios for day-to-day living expenses. By focusing on a high-quality dividend ETF like SCHD, you are securing a reliable income stream without worrying about market fluctuations. Don't panic. Stay the course. Market dips are never easy to stomach, but panicking and making impulsive decisions is never the answer. The market has experienced volatility before, and it will again. However, the underlying fundamentals of SCHD remain strong. The companies it holds are fundamentally sound, and while market conditions may temporarily impact their valuations, they are likely to rebound. For investors with a long-term horizon, this downturn in SCHD represents an opportunity to buy at a discount. The dividend yield alone makes it a highly attractive option, and as the market recovers, SCHD's value is likely to appreciate, delivering solid returns for those who maintain their positions. If you're holding SCHD as part of your retirement strategy, don't make drastic changes in response to short-term market movements. Stick to your plan. The dividend checks are still coming in, and over the next 10 to 20 years, the compound growth of your investments will more than make up for this temporary downturn. The market will normalize, and those who remain patient will be rewarded. The bottom line: seize the opportunity. In summary, the current drop in SCHD may look alarming on the surface, but beneath the noise lies a massive opportunity. The recent decline doesn't signal a fundamental problem with SCHD. Instead, it presents a rare chance to buy into a high-quality dividend ETF at a steep discount. With a solid dividend yield, a history of impressive growth, and a portfolio rebalancing that positions it for future success, SCHD remains a top pick for long-term investors. Now is the time for those with a strategic, long-term mindset to capitalize on this opportunity. By remaining calm and focused on the future, you can take advantage of a temporary dip to position yourself for long-term growth and passive income. Don't let short-term volatility sway your decisions. Remember, it's the patient eye